The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how you doing today? My name is Darrell Martin. This is the Diagnostic Trading Hour. And if you have any questions, feel free to give me a call. You can reach me right here at 877-927-6648. If you're outside the United States, you can give me a call at 727-445-1044. And again, that number for you right here in the U.S. is 877-927-6648. I got the diagnostic deviation levels posted up for you, so you can go ahead and check those out today and see what those levels are. We'll go over those a little bit later, but if you just want to look at them right now, you can check them out on Tiger TV. You can also check them out over in the Tiger's Den. And just a lot of things going on, but first things first, as we do each and every day, we first go in and we look at where the market's at and keep you updated, so that way if you're listening to us while you're out and about today, then you know where the markets are at and what to expect. So let me pull that up, and I will show it to you. What we got right here is on the markets going on, and basically after a big Friday, we have sort of a quiet Monday. And a couple of them are moving a little bit, but let's just go ahead and run down the list. We got the S&P, it is down a point. We got the NASDAQ is up 12 points. We got the Russell up 1.9, and we got the Dow down 19. Over on copper, it's moving a little bit. It's actually down about a little less than 0.5%, but almost 0.5% right now. We got silver down about 0.75%. Gold's down $4 on the day right now. We got on our ag side, we got the corn. Corn is moving. It's actually up about 0.5%. Not really a big move, a $3 move right now on corn and a $10 move over on soybeans. And looking at our energy sector, oil is up down 50 cents, just moving around a little bit today, but down 50 cents right now. And natural gas dropping like crazy, down over 3% today. So markets like that, you better be trading Nadex on. Some scary stuff out there. You need some good risk management built into your trading instrument. Whatever that instrument is, Nadex is definitely a good way to use that to help out on markets like that we're going over right now. Looking over at our currencies, you got euro dollar is up 36 pips right now. You got the pound dollar up 11. You got Aussie dollar down 22. U.S. yen up 52 pips. U.S. franc down 15, and the U.S. Canadian is up 8 pips on the day right now. So really just overall, I guess you could say, except for maybe soybeans is moving a little bit, and, but natural gas obviously moving a lot. But beyond that, pretty quiet. And we can go in and maybe even pull up, a chart on the natural gas and just look at what's going on over there, and I'll show that to you right now. But like I said, it's sort of the big mover on the markets that we usually monitor right here. Now, of course, you can always call in and ask about anything, stocks, options, forex, futures, and I'd be glad to help you out. But you can just see this nosedive that natural gas has been taking all day long. And if you were straddling natural gas this morning, if you're short natural gas, whatever, depending on however you decided to trade it over on Nadex binaries or spreads, you would have had some very nice moves that you could take advantage of with that and been able to do so with very limited risk. And we can see right now that natural gas is all the way down at, and just make sure, I'm going to go ahead and pull up the December contract, because that's what Nadex is on right now. So I'll give you one more view there of the chart. The December contract still seeing the nosedive. And over on December, looking at natural gas, just on our deviation levels, you can see it is just falling all the way down here. And basically it moved on down. I'll flip around side to pull the chart up while I'm reading the levels off to you. And what you can see is on natural gas, let's see here, 3.839 was a one deviation move. So 3.8 and then 3.9. So like right here, basically you can see where it oscillated right there. That was a one deviation move. And then 3.875 was actually a half deviation move, and you can see that's also where the other oscillation was. And then it moved on down again here. And looks like to go all the way to a two deviation move, we'd have to see it move down to 3.768, and we have got pretty close. We're went all the way down to 3.78 so far. So really not that far away from a two deviation move. And if you ever want to calculate like a 1.5 deviation, all you got to do is take the deviation of like -1. So if we're going to go negative 1.5, we go, okay, well, what was -1? Well, -1 was down to 3.839, okay? And then we go down, we take basically half a deviation off of that, so minus 0.036. So 3.803. So that's 1.5 deviations, basically, within like a tick or two. But 3.803 would have actually, so basically right at it. I mean, you're really not going to get any closer. And so just, very, very helpful. And just like I said, it stops at it and then just moves on down. And it's moving, like I said, just a little bit away from that 2 deviation move after those just dramatic drops in natural gas. So very cool way to trade, very nice volatile instrument that you can take advantage of. And, not as liquid as an instrument. So no matter where you're trading it, but definitely one that you want to definitely have your risk management under control when you hop in there and look at it. Now, the other thing we like to look at every day, and I'll go ahead and put these up for you while I'm reading over and checking out the fundamentals for you, is Diagnostic Trading is looking at how fundamental traders look at the market, looking at how seasonal traders look at the market, looking at how technical traders look at the market, and looking at how statistical traders look at the market and go, where are they going to place their orders? And how can I take advantage of that to be one step ahead? Okay, so at the statistical side of trading, that's the deviation levels. So right now, let's go ahead and let's check out the fundamental side. And while those are up there, I'll go ahead and talk about it. But today, very little to no news. We do have a little speech coming out here in about 15 minutes by the FOMC member Planalto. And he's going to speak about the U.S. payment system at the Chicago's Federal Payment Symposium. So should not be a massive market-moving event unless he shares his opinion about something, which every once in a while he does have the tendency to do. But he's not the most outspoken of all of them there. So he's the Federal Reserve Bank of Cleveland guy there. And so you can always go and check them out. But that speech is coming out here in a little bit. I'm trying to see if I can find even a link for you that you could take advantage of. Yeah, clevelandfed.org. And so they'll have the speech and everything posted up there after he makes it. And but just be aware that speech is coming out here in just a little bit. It's clevelandfed.org. So that's the Federal Reserve there in Cleveland. And then we're going to have the CB leading index. So that'll come out for the Aussie tonight for you Aussie dollar traders out there. And that's not a major market mover. Okay. So just be aware of that. If we go over and we check out the seismic quake index over in the Olsen scale, it's sort of a cool little tool I like to check out now and then. And you can go over and you can actually see how much markets move based on certain announcements and, what currencies get affected the most. And you can see that Aussie dollar, obviously, it's an Aussie announcement, does usually get affected the most. So Aussie dollar, Aussie New Zealand actually has a little bit more impact on the last announcement. And we can even go back and look in history at, different ones. And, of course, you're going to see that consistency of Aussie New Zealand, Aussie dollar being the biggest impact trades. And there's also Canadian. That one actually had a larger impact even the other two last time. But so Olsen scale, sort of a cool little tool to check out. Don't get too bogged down in it, but it is helpful to see what news announcement affects what currency the most. But anyways, we'll hop on back over. We'll check out what else is coming out, what has come out, and of course last week there on Friday we did have a few things come out of the market, but nothing that was just market moving after hours, of course. New Zealand now did have, understand they did have a holiday yesterday, okay, or, that's their Monday. And so they were, the banks were closed anyway, the bank holiday. And then we had some yen reports come out. And if you follow up on that, we get into today with a very, very quiet day. Not surprisingly that the markets are quiet without everything else moving around. So you just want to keep that in mind when you're looking at everything and seeing how it works and how it moves. And let's go ahead and check out what else we got going on that you can take advantage of. And let's see here. Let me pull this up, and I'll look at what is going to be coming out later tonight. And so we got a couple things right here on Tuesday. What do we have? We have the BBA mortgage approval, so that'll be a little bit of an impact right there. That's going to be Britain. That's coming out at 3:30 a.m. Big numbers, though. 7:30 tomorrow morning at core retail sales in Canada. Also have the Bank of Canada rate statement. So if you're an oil trader or a U.S.-Canadian trader, and then that's going to affect it. Their overnight rate, everything's going to be announced. Expectation of them moving anything, probably not any movement at all. They've kept it at 1%. I don't see them lowering it at all. The core retail sales, though, could obviously definitely be an important number and affect, because obviously they're a major trade partner with the United States. So looking at that right there, just expect that to move the markets a little bit so that way you're prepared and you are ready. And going on over and checking out a couple other things. We're going to have the euro is going to come out. They're going to have a little business climate report. That's not going to have a big impact. Then we go over to 12 o'clock tomorrow. The Bank of England is going to have a little speech coming out. So the Bank of England Governor King is going to speak. So they're going to be speaking in South Wales Chamber of Commerce, and it's going to be Mervyn King, not the King. So Governor Mervyn King is going to be speaking. And if you want to know where the Bank of England's website is, I'll pull that up for you. And that's bankofengland.co.uk. So it'll have all the details on there, monetary policy, everything else will be coming on out. And then if you need the Canada one, I guess I can open that up. Make sure you have access to that as well. So Bank of Canada, if you're ever on Tiger TV, I just like to throw these links up there for you. bankofcanada.ca, okay? And I did talk about the core retail sales. So if you're looking at where to get the statistics website from Canada News Releases, it's pretty easy. Just going over to statcan.gc.ca. Again, StatCan, like Stats Canada, okay? statcan.gc.ca. And you can keep up with their latest news announcements. Like I said, they have core retail sales coming out at 7:30 tomorrow morning. And following that up with their rate statement at 8 o'clock tomorrow morning. So that ought to help that currency move a little bit, which, of course, you move the dollar, and depending upon how good or bad, if there is a big difference in the retail sales number, could have a definite impact, of course, on the U.S. markets when they open up. Now, of course, everything is depending upon all these earnings announcements coming out and whether they're good, bad, ugly, or, indifferent. So it depends on how it all comes out. And after we got Britain having their Bank of England governor speaking, again, that's going to be at noon, so that can make the pound dollar middle day. A lot of times we don't see a lot of movement in currency at that time, but depending on what he says, that could have an impact. Then we'll roll on back over to the Aussie at 7:30, and we'll have the CPI 7:30 tomorrow night. So Aussie having a lot of nice trades setting up for evening traders out there. And then we're going to head into Wednesday. Wednesday is actually going to start getting some news announcements coming out. And so we're going to have the French Flash Manufacturing PMI. And on that's basically a survey of purchasing managers in the industry and, how they view market conditions. So that's coming out of the Euro at 2 a.m. on Wednesday. It's also going to have the German Flash Manufacturing PMI, obviously Germany being one of the biggest of them, is coming out. And so that's going to have a huge impact. That comes out at 2:30. So 30 minutes after the French one, the German one's coming out. And then the German IFO Business Climate Report is going to come out at 3 a.m. So they're just releasing them. They're stacking them and tearing them. And it's a composite index on the German IFO Business Climate Report. And it's basically just a big economic group research group, CESIFO-group.de. And so you can check that out and look at that. And but that number, basically, they're going to go in and they take 7,000 different business respondents. So it's a huge report. And they rate the relative level of current business conditions to the expectations for the next 6 months. So it's definitely a long-term outlook, and so it can have a big impact on the euro. And there's even more coming out right after that in Europe. So Europe has a lot of stuff coming out overnight on Wednesday. Hold it right there. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're going in and we're talking about the upcoming fundamental part of diagnostic trading. So when and what is going to be moving the market. And so we're on Wednesday right now, and we last wrapped up talking about how the flash manufacturing numbers are coming out, French, then German, then the German IFO, and they're just going to keep releasing them one after another. And then Draghi can come on and I guess maybe try to save the day. That's the European Central Bank guy and the president of the ECB. And so he's going to come on and he's going to do we got a closed-door meeting about the budget. So I guess I don't want people to hear what he has to say. And the European Affairs and Finance Committees and the Outright Monetary Transaction Program at the Deutsche Bundestag in Berlin. Who knows if I said Berlin? Who knows if I said any of that right? But anyways, that's going to be happening again, and you can check out any details that are updated right there at the ecb.int. And you can check that out and just sort of see what is going on there. But really, it's a meeting that they're going to come out and they'll make some announcements out afterwards. But that'll be happening early in the morning, and we ought to hear about it here in the United States as the market's opening up. And then he's going to come out and, he has his open meeting, so it's a press conference. All right, so right after this meeting that happens at 6:45, he's then going to come out at 9 a.m., and he's going to do a press conference. So about the issues they have regarding, all the crises happening and the budget issues and all that stuff and how they're trying to figure out how to make, France and Germany and everybody else work together. So it'll be very interesting to see how that rolls out, but a lot of European news is going to be driving the market overnight and into the morning. And as he's talking, new home sales is going to come on right on out. Right now, the expectation is that new home sales will come in at 386,000. And they actually came in at 373, below expectations last time. And they haven't been up at 386 in quite a while. So, I'm just looking down. I see 386 back in December of 2009. So if we hit that number, that'll be one of the highest numbers in, basically 3 years. And so... that would obviously be very bullish if we hit it. Oh, wait a minute. I got one. January 2010. We had nope, we didn't hit it. Thought we hit it. So that was the expectations. But yeah, 386. Just going back. And close. Okay, I did find in May of 2010 we had 504,000. All right, so that'd be about 2 years. So it'd be the highest number in a little over 2 years if we actually did hit that number. So if we do hit it, then that should be a very positive thing for the market. If we don't, it should not be a big surprise to the market. And we should, it could obviously impact the market at 9 o'clock. And, of course, Draghi, what he says can have an impact as well that may either coincide with that or balance it out. So they could be fighting each other, meaning we could have a good homes report, bad Draghi report. I doubt we'll ever have a bad Draghi report. Where a good Draghi report may be a bad home sales, so they could stifle each other. But if they're both good, then, of course, that could really give a lot of oomph to the market right there at 9 a.m. The Bank of Canada's monetary policy report, so why they decided to leave their interest rate at 1%. That'll come out at 9:30 on Wednesday morning, so basically 30 minutes after the new home sales report. And then, of course, we'll also have the crude oil inventory report. So you're going to have a Canada monetary policy report, and you're going to have crude inventory coming out. It's going to have big effects on the U.S. Canadian on Wednesday at 9:30. And then Bank of Canada will come and have a press conference at 10:15. So expect a lot of volatility in oil, at least during those hours. And then, of course, we're going to have the FOMC statement. Oop, it's that time again already. FOMC statement is coming out at 1:15 on Wednesday. So make sure you keep that one on your calendars, right? So the federal funds rate is coming out at 1:15 on Wednesday. And so, of course, I'm sure they're going to raise rates and give us a lot of surprises, but probably not. Anyways, but that number is coming out then. And then we'll go over and we'll have the official cash rate or rate, basically the same thing in New Zealand, is coming out at 3 o'clock on Wednesday. So the market actually will still be open when that one's coming out. And just verifying, yep, so that one's coming out the same day as our Fed funds rate right here in the U.S. And we'll roll on over to Thursday. There's some, little things going on, nothing big. And then Thursday morning we come out with the preliminary GDP quarter over quarter in Britain. And that's going to happen at 3:30 Central Time. And so just keep that one on your calendar. That's going to be a good pound-dollar mover right there. And, of course, it'll have impact on other things as well. But pound-dollar will be, of course, the dramatic impact because it's the GDP of Britain. And moving on over, we're going to have and GDP that's the big number. That's the number that the Fed supposedly is trying to stimulate, but isn't, because they're buying mortgage-backed securities. You're not putting money in the market. So for GDP to grow, money has to turn over and over and over and over again. The faster it turns over, the bigger GDP grows. The bigger GDP grows, the more jobs are required because money's turning over, and people need more people to fulfill all the requirements of fulfilling services and products and everything else. But none of that money is going into the money supply. It's going into mortgage-backed securities and just trying to help the market stay floating. So basically the current bailout money will have no impact on unemployment or GDP. But we'll keep going, and we only got 2 more days here to wrap up the week, and then we'll go into and start checking out what is going on right now and how you can take advantage of it. Stay right there, folks, right after this commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back into the Diagnostic Trading Hour. Just keeping an eye on the markets, looking at natural gas, and that thing is just moving and moving. And we are now literally 2 ticks away from a 2 deviation level right there. You can see if you're over on Tiger TV and in the den. We had a second deviation moved down to 3.768, and we are sitting right there at 3.77. So I mean, just a few ticks away, almost right there at the level of 2 full deviations, which is massive. That's 95% of all expectation of move in a market in a given day. So not expecting a whole lot further move. There is only a 0.3% chance to actually break the 3 deviation level. It's really, really rare when we ever see that. So back on and wrapping up the week. Like I said, we got earnings coming out this week, and we got ECB Euro announcements coming out like crazy, and we also, of course, have our Fed funds rate. So Wednesday is going to be a fun day. We're walking into Thursday talking about having the preliminary GDP. Then we're going to roll on over to the U.S. We're going to have core durable good orders month over month, and, of course, unemployment claims like we have every Thursday, along with natural gas inventories. So what is core durable good orders compared to just durable good orders? Well, core durable good orders is the change in the total value of new purchases and orders placed with manufacturers for durable goods, excluding transportation items. Okay? So, whereas the durable goods is the total value of purchase orders placed with manufacturers for all durable goods. And the core durable goods is actually the number you want to focus on. It's the one that has the bigger impact on the market and a little bit more important. There's a lot of reasons for that. But they both are a leading indicator of production and rising purchase orders. It's just sometimes you get transportation items that can be so expensive that they can sort of skew the numbers. So looking at it without the transportation items in there, you can really see, are orders picking up or are they slowing down? So will manufacturing increase? And this is where this comes into place, okay? Is manufacturing going to increase or decrease? So therefore, is GDP going to increase or decrease? So it has a huge impact on a lot of things, and that's why core durable good orders is so important. That comes out again 7:30 Central Time on Thursday morning. And then a couple hours after that, hour and a half after that, 9 o'clock Central Time, we're going to have pending home sales rolling on up. And of course, we have existing home sales that's coming out earlier in the week. So, we had those come out, I guess, last Friday. So in the U.S. here, and we had existing home sales come in a little better than expected, and at the same time down from the last report. And then we have all the other reports coming out. But again, we're going to have the pending home sales. So what's potential, what's in the making, that's a very leading indicator. And lets us know, what's coming up and because that could, of course, affect construction, which is money being spent in the economy. That's real money supply, not the fake money that is going into all these other things that doesn't end up in a money supply. So it's a very, very good thing to check out, and it can have a big impact. And the expectation is incredibly high, okay? It's really high. They have an expectation right now of a 2.4% growth rate, so changing the number of homes under contract to be sold. And, definitely possible. I know, foreclosures are definitely slowing down everywhere, and but that is a very high expectation compared to what we've had recently. Like we had negative 0.4 was the expectation last time. We had 1.1 before that. We had 0.6, 1.2. So last year, this time, we can look over and we can see, what was it in October of 2010. And that's a number, you want to look at what's the expectation, how did the number come out, okay? You want to look at, did they revise past numbers? You want to look at how does it compare to the previous reported number. It's also going to look at how did it compare to the previous year, okay? So last year, 2011, October, the number came in at 0.2. And basically the same week in October there. So the October number came in at 0.2. What was the expectation? The actual number is negative 4.6. So it came in a lot lower than their expectations. And they didn't have that high of expectations last year. But it came in at negative 4.6 at a 0.2 expectation. In 2010, they expected 3.2, and it came in at negative 1.8. So, or actually it came in at 4.3. It actually came in a couple points higher. So we'll see. They're sort of looking at October 2010 levels. That's sort of how the expectations are playing out right now. That's interesting. But we're not seeing the November or October 2011 levels. It's not quite matching up. So we'll see if that number comes in at expectations, but it is high compared to the previous expectations. That actually will be the highest number expected, okay, this year. So for 2012. If that number does come in, then it won't be the highest number for the year, but it'll be the highest number expected that actually what did happen. So that's going to come in 9 o'clock on Friday with an expectation of 2.4% increase on pending home sales increases on Thursday. And then, of course, natural gas storage. That's always a big one right there. And be careful when you trade that. Especially, I would not even recommend touching that thing on the futures during the inventory reports because there's so much manipulation going on in the markets around those reports. But that's where things like Nadex come into play. And then going over and we check out Friday, we're going to have advanced GDP right here at home. We're also going to have a Spanish unemployment come in overnight on Friday, 2 a.m. And it has been just tough. So I can't even imagine. But the number they're reporting, we're not even talking about the real number, okay? The number they're reporting, their unemployment rate, is expected to come in at 25.2. And that number is just growing and growing and growing. And let me see here if I can get this up on a graph for you, and to show you how bad. I mean, this is horrible. But let's see. I'll try to get this a little bit more zoomed in, and then move it on over there for you. But check this out right here. I mean, this is the unemployment chart for Spain right now, and it's just been climbing like crazy. And you can just see. I mean, 2008 they're at 8%. And they go on up to 14, 16, 22, 24, 25, and they're expecting it to go even higher. And so it's really rough over there. I mean, people are not happy. Obviously, they're rioting, and there's a lot worse things. I don't even want to talk about it on the show happening over there right now. But they're having a rough time. And so it's pretty difficult. So, we think it's bad with 8 and, percent. And of course, we know our number is higher, but that means their real number is higher as well. Okay? And anyways, but that's coming out, so that's the bummer thing right there. But that will be coming out. That'll, of course, impact the euro on how that number comes out and the expectation of will Spain finally ask for a bailout or not with their continuing worsening unemployment number. And then we'll have our advanced GDP again come out at 7:30 in the morning. And that's obviously very big. It is the quarter-over-quarter date, but it's reported in an annualized format. So they change it 4 times a quarter. And there are 3 versions of the GDP released, a month apart. So they have the advanced, they have the preliminary GDP, okay, and then they have the final GDP. So the advanced release is the earliest one out of all 3 of those. So the first thing we're going to have, again, is we're going to have advanced, then preliminary, then final. So this is ahead of the other 2 GDPs. So it's actually the most important of the GDPs. We won't see another report on this till January 20th of next year. All right, looks like we got a caller on the line, and let's see here. We got Max from the Tri-Cities. How's it going, man?
Pretty good, Darrell. How are you?
Doing great. How are you doing?
Doing well. Catch your show from time to time on Tiger
Thanks.
TV, and pretty intrigued about your standard deviation. Can you explain what that means and how you come about calculating it?
Yeah, basically, it's a little bit. There's pivot levels. And there's standard deviations, and this is actually a little bit different. I actually use implied I call it diagnostic deviation. I'm using implied volatility to calculate it. And because implied volatility, that's the premium built into options for the expected move. So like if Apple's going to release earnings, then their options are going to be more expensive right before earnings because they expect more of a movement.
Right.
But after the earnings come out, then the options get cheaper. Okay? So
right.
Basically the chance of a crash
the IP
type
goes
thing.
down.
Exactly.
Right.
And so the implied volatility actually tells you how far the market expects that market to move. And so I pull the implied volatility numbers out of 4 months options, okay, the 4 next months options for that specific underlying market, and I pull the 4 different implied volatilities for the 4 options that are right around at the money. And then I average that number out, and then I factor it into a very long equation for a deviation formula. So it's a big, long math formula. I use a computer to do it.
All right, now is that something that's available through TFNN?
Yeah, it is. It's about to be. So we're like right on the edge of it, and we're going to be launching it. I'll show you here real quick. But it'll be coming out here any minute, and so I'm just waiting to get the final go. And but yes, you'll be able to access this. It'll be part of the new. We're going to have a diagnostic members area, and so you can go over there. And you'll be able to go in and get the deviation levels. And we're adding a lot onto this, too. Eventually, it'll actually cover 40 futures markets and like 3,800 stock markets, stocks. But right now, we have it built all for the Nadex markets. And then we go in and we'll have the box spread scanner, and we're going to have a lot of other tools built in as well, and training and tutorials and everything else. So that's about to be released, so like any day now.
Okay, so it's not necessarily a fairly easy pen and paper calculation to come about the of the so you can apply the move there. Now, for
it's not like pivot points are like it takes 5 seconds to calculate, but they're also like completely hit and miss. I mean, this isn't a fancy math thing. It's just literally how far does the market say the market's going to move? Right. And so that's how we're putting it together. But yeah.
Okay, and is it good for commodities, stocks, ETFs, all the above?
Yeah, the formula works on everything. I can plug it in like right now to any stock, any ETF, any index. Like if somebody's trading options on the index, anything right now. Right now, I have it built for the Nadex markets, and once we get everything launched out, then what I'm working on right now, I actually have a couple programmers that work with me full time, and what we're working on right now is making this work on over 3,800 stocks, ETFs, indices, ETNs, 40 futures, and it'll only actually work on 5 of the Forex pairs. But it'll work on, basically it's because of you can't get enough accurate option implied volatility out of the other Forex pairs. But it'll work on 5 Forex pairs, the Aussie dollar, or actually 6, I guess. Aussie dollar, Euro dollar, pound franc, US Canadian, and US yen. And but yeah, it'll be a pretty cool tool. And then the next step will actually make it where it'll feed right into a chart for you.
All right.
So
I don't know if this is something you can do there during the show, but I put a trade on a week or so ago on SLV. I'm trading the options on that. A technical trade, it formed double top, and then the classic big M. I'm thinking based on volume and what Tom talks about, it's going to retrace at least down to the 30.05, the 200-day moving average. From the standard deviation, can you calculate what you think that the SLV will move based on standard deviation?
let me see here. Yeah. When's your expiration on your option?
Let's see. I'm actually holding to November. I usually don't hold that close, but I'm just looking for that move down to about the 200, maybe a little lower. So I've got the November 31.50 puts.
Let me see if I can do it right now. If they'll cooperate. I have so many things open on my screen. This is a pretty intensive program that runs all this. And okay, got that. Got the. All right, give me one second. I'll do it while we're in the air. Okay.
All right.
And let me pull in. Let's see, silver. Now, when did you? You know when you bought it?
Yes. Actually, let's see here. I might count up right now. I've been holding this contract for about a week. I initially bought into the 30s, made a nice profit, then rolled that over to the 31s, took some cream off the top. So, let's see here. I think I'm in it at 98 cents a contract. So I'm thinking it was about a week ago that I got into this.
Okay, so we're looking at like 10, 15, whatever, something like that?
Yeah, right around
last Monday. Okay, so that way I'm just trying to pull the actual volatility level from that day. Okay, so going here, I'll plug it into this big old massive calculator. And let me put in what was the closing price of silver then? So closing price of silver was around, 31.66 it looks like. And, okay. So, and then now it's a matter of how far out do you want the actual deviation number to go?
Let's see. I would say the 9th of November.
All right, so let's go in here and put 9th of November. So from then, let's see, the 15th to the 9th of November, basically like 21 days, approximately. Yep. Okay. All right, that'd be more than that. Well, yeah, I guess it'd be about 21 days. Okay. So, all right, now deviation level is the highest expectation of movement. So now you're looking, I guess, you have calls on, or you have puts on, or what?
I got puts on.
You got puts on. Okay, so the lowest expectation we'd have, that's pretty far out. I usually don't use this formula on that, but we could still use it. Let's see here. Expectation on the 9th, by the 9th of November. And I mean, it shows it could actually move down to around 25. So 23.23 is actually the full deviation move. Now that's a pretty big move. I don't know, based on technically, I would set that up. Usually, I don't use this on more than 5 days. This particular formula, so because it's designed for intraday, shorter term trading.
Got it.
So it's a little bit. I mean, I wouldn't call somebody to expect silver to drop back to that. No. But I mean, who knows? But
that one didn't.
Not unless something new comes out that none of us are expecting, right? Yeah. But as far as like 1 day, 5 day moves, that's pretty easy. And you can go in on that, and on a 1 day move, I mean, you're talking about a 57-cent range on a consistent basis, so that you could expect. So up or down.
All right, so it's better used intraday, but thanks, and I look forward to being available on TFNN.
Hey, you bet. Thank you. Appreciate you for listening. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome back to the Diagnostic Trading Hour. Doing a wrap-up on the market and where everything is sitting at right now. We got the S&P is down about 4.5 points. We got natural gas up 7. We got the Russell is down 0.5, and we have the Dow down 51. Looking over at our metals, we got copper has been a bit of a mover today. It is up about 0.67% right now on the day, almost a 0.7% there. And we got silver is, actually it's down 0.67% if you're looking at the December contract. Looking over at silver, it is up 0.6. We got gold, it is up $2.80 right now on the day. And on our agriculturals, we still have corn looking pretty flat and soybeans up just a little bit right there, $10 up right now on the day, which is not a huge move for corn or soybeans as we've seen recently. Oil is actually now down $1.19, so it decided to wake up during the show, and it's been moving quite a bit. And I can open that on up, show it on to you real quick before we wrap up on the show. But it looks like all of our energies have just decided to move some more. And you can just see this thing has just dropped. It came down and chilled out, and then just kept on moving. Right now down a low of 89.06. And we can go over here and look at this and just sort of check out, what does that mean for the different levels? Well, we had a level of 88.76 was a full deviation move, so not even outside of expectations. But we did have a 0.7 at 89.31, which is right here where we're seeing the hesitation. And then we had the half deviation at 89.68, which we definitely saw, come right down to that level. Bounce, come back down to that level. Bounce, come back down to that level. Finally break through, move down to the 0.7. And so now it's going to try to decide if it can move down even further. And, of course, natural gas is just moving down all morning long. And so seeing some huge movements down on that. We finally did break down and hit that second deviation level. I was wondering if we were going to hit it. We went ahead and moved on down. Natural gas 3.768. We're down to 3. Wow. Oh, wait a minute. Let me pull up the right contract. I got to make sure I'm looking at the December futures. And so out the December futures, it's 3.77. So, yeah, there we are, 3.7. We're still just a couple ticks away right there from hitting that second deviation move. So I think natural gas is probably done for the day. Anyway, so wrapping on up everything, other markets that we got going on, looking on over at our currencies, we got the euro dollar is up 33 pips. The pound dollar is up 6. The Aussie dollar is down 25. The US yen is up 50 pips on the day right now. And the US franc down 15, while the US Canadian is up 17. So right now, the big mover on the day so far, it is a race between, looks like, euro dollar and Aussie dollar. Euro dollar being up 25.25% and Aussie dollar being down 0.24%. And anyway, so just make sure you're keeping track of those. By the way, you can trade all of those over at Nadex. If you haven't already, hop on over to TFNN.com, click on Nadex. Once you're there, click on Create Account. You can check out what is all this stuff I've been talking about on Nadex. All right, binary, spreads, there's education, there's webinars, there's more. But hop on over here. You get an account from start to funded. And you can fund with as little as $100 to get full access to a live account, platform, data, everything that's built in. Start to funded, little as 5 minutes. Okay, literally. And then hop on over here under our products or at the top under our products and for Nadex and click on demo account. In about 15 seconds, you can have a demo account. Just put in your username, first name, last name, phone number, and email address. Click apply for demo. They'll send you an email right away, and you can log into your demo account, and you can actually start trading these markets like corn and oil, and you can go over and you can trade currencies and the S&P 500 futures, things like that. You might be nervous about trading because you haven't got into it. Maybe you've been a stock trader, but you've noticed that, $100 in stock, $100 only buys like, 2 shares of $50 stock, or maybe if you're, using margin, you can get more. I mean, there's a lot of different ways to do things, but the margin, the leverage is insane. We're talking like hundreds to one, but without the leverage going against you. So it really helps your money work harder for you without the fear that you'd normally have if you're hopping over into futures. So it's a great thing to test out. Hop over, get a demo account, check it out. Let me know if you have questions. I will see you tomorrow, 12 to 1 Central, 1 to 2 Eastern.